We are going to look at the basic considerations in determining a person's tax obligation, the things that they consider to determine how much tax are you supposed to pay. Yeah, they are mainly three things, and the first thing is the nature of a person. Then we have the residence of a person, then the type or source of income received by a taxable person. Yeah. So nature of a person. The nature of a person is a taxpayer, and we said a taxpayer, according to income tax, is that person who derives any amount that is subject to tax under the Income Tax Act, and they incur an assessed loss, and at the same time they are required to furnish a return, and that is a taxpayer. Yeah, and we said a person, a nature of a person, and we said the person can be an individual according to tax, can be an individual, a partnership, a trustee, a company, a retirement fund, a government, a political subdivision of a government, and then a listed institution. So when they are determining the amount of tax you're supposed to pay, they consider the nature of the person. Are they dealing with an individual? Are they dealing with a company? Are they dealing with a trustee? Like different persons pay different taxes and they have different terms and conditions. An individual cannot pay the same tax as a company, and an individual cannot pay the same tax as a government or a listed institution. Yeah. So the first consideration is the nature of a person. And the second consideration when they are determining the tax, it is the residence of a person, whether someone is a citizen of the country or they are not. Yeah, it's what they base on. A citizen of Uganda cannot pay the same tax as a non-citizen of Uganda. Yeah. So residence of a person, the first thing we have to look at is the residence status. The residence status, this categorization is relevant to determine whether a taxpayer is to be taxed on his worldwide income or only the income that is derived from Uganda. Because we said a resident person, a person who is a citizen of Uganda, he is taxed on the income that they have derived from Uganda and the income that they derive from abroad. But for a non-resident person, they are only taxed on incomes they derive from Uganda. Yeah, so the categorization of whether someone is a resident or a non-resident is important because we want to determine whether a taxpayer will be taxed on the worldwide income or only the income that is derived from Uganda. Let's look at a resident individual. Since we are looking at the residence of a person, we say the person can be an individual, a company, retirement fund, a government, listed institution. Yeah. So we are going to first look at a resident individual. Who is considered a resident individual and who is not? Yeah. An individual is a resident individual for a year of income if that individual, first of all, has a permanent home in Uganda. If you built in Uganda, if you have a permanent home in Uganda, if you're always here, or if you did not build but you're always here. Yeah, if you have a permanent home in Uganda, you're considered a citizen of Uganda. Then secondly, if that person is present in Uganda for a period or periods amounting to 183 days or more in 12 months period. Yeah, if you be in Uganda for a period of 183 days, you are considered what? You are considered a citizen of Uganda. 183 days is something like 6 months. So if you're in the country for a period of half a year, you're considered a citizen for that particular year of income. Then another way of determining a resident individual is if during the year of income and in each of the two preceding years of income for periods averaging more than 122 days in each such a year of income. So if during a particular year of income, for example 2022, you were in Uganda, for example, let me see, for 110 days, then even the previous year, 2021, you were in Uganda for 108 days. Then even in 2020, you were in Uganda, for example, for 150 days. Yeah, all of them, you did not reach 183 days. So if they add them, and they get the average, they divide by 3. If they get days that are more than 122 days, you're considered a citizen for that particular year of income. You're considered a citizen in 2022. Yeah, you're a citizen of Uganda in 2022. If they add up the days and then divide, if they get the average, yeah, if the average exceeds 122 days, you're considered a citizen of Uganda. Then, lastly, to be considered a resident individual, if you are an employee or official of the government of Uganda posted abroad during that particular year of income, you're still considered a citizen of Uganda. Yeah. Let's look at a resident company. Which company is considered to be a resident of Uganda and which company is not? Yeah. A company is considered a resident company for the year of income if, first of all, it is incorporated or formed under the laws of Uganda, if it was registered under the laws of Uganda. Yeah, it's considered a resident company. Then, if it has its management and control exercised in Uganda at any time during the year of income, if it's managed and controlled from Uganda at any time during that year of income, it is considered to be a resident company. And lastly, if it undertakes majority of its operations in Uganda during the year of income, if maybe you operate from Uganda like for 10 months and then you do the rest of the operations in another country, you are considered to be a citizen of Uganda. You're considered to be a resident of Uganda. Yeah, a resident company of Uganda. So those are the 3 things that make a company to be a resident company. If it was incorporated, then if it has its management and control exercised in Uganda at any time, and lastly, if many of its operations are done in Uganda during that particular year of income. Let's look at a resident trust. A resident trust, when is it considered to be a resident and when is it considered to be a non-resident? Yeah. A trustee relationship, it is when someone puts confidence in another person to take care of their property, especially when the person who is supposed to take over the property later is still young or they cannot take care of it at that particular time. It's when the trustee relationship comes in. Yeah. So a trust is a resident for a year of income if first of all it was established in Uganda. Secondly, if at any time during the year of income the trustee of the trust was a resident person. The trustee is that person that they trust the property with, or the person in control at that particular time. So if at any time during the year of income, that person was a resident person of Uganda, it is considered to be a resident trust. Then if the trust has its management and control exercised in Uganda at any time during the year, it is considered a resident trust. Let's look at a resident partnership. Partnership, it's when 2 or more individuals come together to form a business for an aim of making profits. Yeah. So a resident partnership. A partnership is a resident for a year of income. If at any time during that year, a partner in the partnership was a resident person. So it is considered to be a resident partnership. If we are two partners, for example, if there is Sharon, there is Sarah, and then Chantel, if at any time during the year any of us was a resident person, and we say the characteristics of being a resident individual, you either have a permanent home in Uganda or you've stayed for more than 183 days and all that. So if at any time during the year any of us was a resident person, our partnership is considered to be a resident partnership. Let's look at a resident retirement fund. Retirement fund is that money you pay so that it can cater for you when you stop working. So a resident retirement fund is considered a resident if it was organized under the laws of Uganda. Secondly, if it is operated for the principal purposes of providing retirement benefits to resident individuals. If the person who is to receive the benefit or the money is a resident of Uganda, it is considered a resident retirement fund. Then if it has its management and control exercised in Uganda at any time during the year of income. Let's look at a non-resident individual. A person is a non-resident person for the year of income if the person is not a resident person for the year of income. So if you do not have all the above characteristics that we mentioned, you're considered a non-resident individual. Yeah. If you are not a resident, of course, you're the other side, you're a non-resident individual. Let's look at a short-term resident. A short-term resident, it means a resident individual other than a citizen of Uganda, present in Uganda for a period not exceeding 2 years. You are just here for some few years and then you go 1 to 2 years. So if you're a resident of Uganda but not exceeding 2 years, you're a short-term resident. Yeah. And the foreign source of income of a short-term resident of Uganda is exempt from tax. They do not tax your foreign source. If you have a business abroad that brings you money, that money is not taxed. Yeah, and that is a short-term resident. Remember, there were 3 basic considerations in determining a person's tax obligation or the amount of tax that they're supposed to pay. And the first one, we had the nature of a person. Then the second one was residence of a person. And the last one is the type or source of income received by a taxable income. The type or source. It can be business income, it can be employment income, and it can be property income. Yeah, so those are the best considerations that we consider when determining the tax obligation of an individual.